Okay. Good evening, traders. My name is Lisa Akuboni. So basically, I've started this YouTube channel to be giving the strategy that I use, which is SMC. And first of all, I wanted to analyze the USDJPY. So as we can see that the dollar is bullish. Okay, so where's our last break of structure to the upside? This was our last break of structure to the upside. And the market came and mitigated this fair value gap, right? This fair value gap also had an order block. Okay, so that's our weekly fair value gap. However, the fair value gap also had an order block. So this is our last break of structure to the upside. So there is no reason why I would be looking for sells in a market that is clearly bullish. However, we have a fair value gap here, right? We also have another fair value gap here, which price looks like just mitigated and closed above the fair value gap. So we're doing a top-down analysis. So now we're going to go to a smaller time frame, which is the daily, or a time frame lower than the current time frame. However, my Wi-Fi is troubling me today, guys, so please bear with me. And also don't forget to subscribe and like this video, guys, so that I can grow my channel. Also, I'm a very shy person, so yeah, I'm a very shy person, that's all I can say, guys. So if we look clearly, this fair value gap, which was our weekly fair value gap, also aligns with our daily fair value gap. So we have two confluences in one point. Remember, your fair value gap is candle 1 and candle 3 distance. So this is candle 1, candle 2, and candle 3. And what makes up the fair value gap is the high of candle 1 and the low of candle 3 in a bullish market. Okay, so I'm going to keep this really simple, really short. This is for the upcoming week. So this is our daily fair value gap. So we already know that we have two confluences here that are aligning with the trend going up. Also remember, we do have a fair value gap right here below. The market could come here, we don't know, but we're going to be dealing with what we are seeing here currently, which is a clear break of structure to the upside. So we don't want to complicate things, we just want to do what is visible to us. So let's go to 4 hours and see what 4 hours has for us. Okay, I'm quite happy because 4 hours even though we don't see a valid break of structure, I mean a valid fair value gap, we do see a break of structure here to the upside, and this is actually a valid break of structure. Why am I saying this? Because if we look to our left, which is this side, these lows were taken out by this week, which means like this low was taken, also this low was taken. So this was our inducement. You see, it was taken out. So for inducement, we'll use X. Okay, and we also have this order block that was responsible for this break of structure. So we have this order block which is responsible for this break of structure. Okay, and then here these are, okay, let me clear this. We know why the market reacted that way there, so we can just have that at the back of our heads. Okay, so we know that within this range there were order blocks from a higher time frame. Okay, and then we have this order block which I want to see if the fair value gap was mitigated here. This is on 4 hours, guys. So on 4 hours, I don't usually just type 4 hour fair value gap. I just say fair value gap from 4 hours going down. So the market did actually tap, even though it didn't tap fully, but it did tap into the fair value gap. You understand? And here it just took the tip of the fair value gap and pushed price higher. Now what are we seeing here? We are seeing a very huge imbalance above this level, right? And we have this order block that is not mitigated. So what's our take? Remember, the market is bullish, okay? And if you didn't have or didn't take buys from within this range, which I think, since we've taken liquidity here, since the market has taken liquidity from that level, swept these lows, to me that appears as the market wants to push higher. Okay, so within this level, I think what is best is for us to go to a lower time frame and see if we have a change of character to the upside, because looking from these lows, it's more like a trend line liquidity that was swept, and then the market wants to push to the upside. Okay, so that's what I'm seeing currently. So let's go to H1 and see what H1 has for us. Well, H1 doesn't actually have a clear break of structure to the upside yet. You understand? Beside this liquidity that was taken, we don't have a clear break of structure to the upside. We'd probably want the market to take this high and close above and then come back within this range from here to wherever the market would have made a retracement. So let's go to 30 minutes. Even 30 minutes still doesn't give us something that is tangible yet. However, what I'm seeing here is that the market did, however, respect these order blocks, pushing price to the downside. So if we say this was our last break of structure to the downside, we also have a level here, which is the order block that is responsible for this breakup structure. Because if you see here, we had a full body closure, so this is a valid breakup structure. Okay, so with that being said, it's more like this level now wants to form as resistance, because it's tapped it once, it's most likely to tap it for the second time. So for me, okay, we'll just use this level now as resistance. But remember, we have an order block here, and this order block was valid because we have a very huge fair value gap within this level. So here's our fair value gap, and if you remember, I said fair value gap is the distance from candle 1 and candle 3. Now here our fair value gap is what? This is candle 1. Candle in a bearish market, you count your candles going from top to bottom, which means now this is candle 1, this is candle 2, and this is candle 3. So the distance between candle 3 and candle 1 is what makes your fair value gap. I hope that makes sense. So the market might want to come to this level and still use this level here as liquidity, and then tap from that level. That also would be fine, because if you remember, we have a fair value gap within this level. We have a fair value gap. Here's the fair value gap here. You understand? So I would like to take my long position from this level, have my stop loss probably at this low. Yeah, have my stop loss at this low, like so, which is about 32 something, 32.7 pips, and then that would be my take profit. You understand? So even if the market does, this is where I'd feel more comfortable taking the trade from. So guys, I hope this video makes sense. As I said, I'm a very shy person, but as time goes on, I'll be able to be more outspoken. And we also have a breakup structure here, though this breakup structure for me hasn't taken out any inducement from this side, so I wouldn't really validate this breakup structure. You understand? So I'll wait for market to come and tap this level, and then if I get stopped out, I get stopped out. But that's a more reasonable trade for me, which is a 1:7.65 RR. So thanks guys, please follow this page, like and subscribe guys, so that I can also grow my channel on YouTube.